Ever thought trading was too complicated for you? Think again. Today I'm thrilled to share the simplest day trading strategy designed specifically for beginners with a little or zero experience. Whether you're looking at the fast-paced world of 5 and 15-minute charts or you're more inclined towards the broader perspective of hourly and daily charts, this video has got you covered. Get ready to unlock a method so straightforward, it's exactly what you need to kickstart your trading journey. And whether you're into cryptocurrencies or you prefer trading major forex pairs and stocks, this strategy is versatile enough for all. Okay, without wasting any time, let's get straight into it. The strategy I am going to share with you today is based on a trend trading style of trading. If you don't know what that is, it's basically when you go with the prevailing sentiment in the market. So you buy when everyone else is buying and you sell when everyone else is selling. If you're excited about simplifying trading with this strategy, hit the like button. It helps more traders like you find these strategies. To learn all about this strategy, let's start with a clean chart. This strategy works on several markets and time frames. It can be used from 5 minutes to 4 hours and more. But as an example for this video, we will use some forex charts on different time frames. The strategy includes 2 indicators. In order to add the first one, click on the Indicators tab and search for LuxAlgo Signals and Overlays Premium. It is the most popular premium tool created by LuxAlgo. It has almost 25,000 likes, which tells us that it's quite legit, so click that to your chart. Now let's open the settings of the LuxAlgo Signals and Overlays indicator and adjust its settings. First, let's take a look at the basic settings. For the presets and filters, we want to use none. For the signal mode, you want to use confirmation and exits. And you do not want to use the AI signal classifier, so make sure this option is disabled. You can leave the signal sensitivity by default, as we are going to use the autopilot sensitivity. Next, for the candle coloring, we are going to use confirmation simple. For this strategy, you'll need the trend tracer overlay, so make sure to enable this option. You can leave the value for the reactivity as it is. By default, it's set to 3. Now you want to scroll down a little bit, and within the advanced settings, you want to set the autopilot sensitivity to midterm, and we are good to go. Now you want to add a second indicator to the chart, so let's click the Indicators tab again and search for LuxAlgo Oscillator Matrix. Click the settings icon, next click the style section and uncheck everything except for the hyperwave and the overbought and oversold levels. To increase the visibility of the hyperwave, you can click the line option and make the line a little bit thicker, just like this. Next, you want to scroll down again to the levels options. Click this one right here and select a thicker line to increase its visibility. And you want to click as well on this line option and change the line type to a line. Now that you've adjusted the overbought level, you want to do the exact same thing for the oversold level. Finally, you want to click the Inputs tab, change this gray to a red color, and you want to disable the option to show divergences as we don't need it for this strategy. Now on to the fun stuff. Let's delve into the trading rules to understand how to use this strategy profitably. We're currently looking at the Euro USD on a 1-hour time frame. Let's first start with the rules to enter a buy trade. For a buy entry to be valid, there must be 4 conditions met. First, you need to identify an uptrend. You can identify the uptrend using 2 simple steps. The first step is to check the candle coloring of the Signals and Overlays indicator. And the second step is to check the trend tracer, which is this line right here. It changes its color from blue to orange and orange to blue. To identify an uptrend, you want to see the candlestick being colored in green, and you want to see the trend tracer line being blue colored. As you can see here, the candles are colored in green, which already gives you an indication of an ongoing uptrend, or, like in this case, it gives you an indication of an uptrend starting right now. To confirm the uptrend, you always need to check the trend tracer overlay. For example, here the candles are colored in green and the trend tracer confirms the uptrend as it's blue colored. But at this point right here, the candlesticks are green colored, but the trend tracer is orange, so it's not giving you a bullish signal. As both are giving different signals, you can guess that. For example, like in this case, the market is actually moving sideways. Basically, the price action at this point is telling you something like, we haven't decided yet where we want to go. Make sure you wait until we've found our next direction. Moving on, the second rule is, you need to see a valid pullback into the trend tracer. For a pullback to be valid, the candlesticks need to touch or close below the trend tracer line. Now for the third condition, you need to check the oscillator matrix. For the oscillator matrix to give you a valid buy signal, you need to see the hyperwave crossing below the 20 level while the pullback happens. Remember, a pullback is valid when the candlesticks are touching or crossing below the trend tracer line. For the final condition, the Signals and Overlays indicator must print a buy signal. You can see a buy signal here, so the fourth rule for a valid buy trade is met. And as you can see here, the hyperwave crossed and closed below the 20 level here, so the third rule is also met. And you can see a valid pullback into the trend tracer, so the second rule is met as well. Now let's check the first rule. The candle is colored in green, which is what we want to see, but the trend tracer is actually orange colored, so the first condition is not completely met yet. What that means is that you want to wait until the trend tracer turns blue. Now at this point, all conditions for a valid long entry are met as the trend tracer changed its color from orange to blue. So you want to open a buy trade at the close of the candlestick, and you want to set the stop loss below the last swing low. By the way, if you don't know what a swing low is, it's very easy to identify. I'll explain it later on. And now you simply let your trade run, and you are going to exit the trade as soon as you get this blue exit signal being printed. Just like this. If you're loving the insights, don't forget to subscribe and hit the like button so you won't miss what's coming up next. Before we dive into our next trade example, let's take a moment to talk about customizing your indicator settings. This step is key to tailoring the strategy to fit the asset and time frame you're trading with. It's essential, regardless of your chosen asset or time frame, to take a step back and look at the bigger picture before you start your trading. This means zooming out on your chart to check the signals within uptrends, downtrends, and periods of sideways movement. When the market shows a clear direction, up or down, the short-term, mid-term, or long-term signal sensitivity settings in the autopilot sensitivity might not make a significant difference. However, in sideways markets or the lower the time frame you are trading on, especially if you're just starting out, I recommend leaning towards the long-term sensitivity. This approach filters out many of the less reliable signals, leading to fewer but higher quality trades. Alternatively, you can open the settings, enable the dashboard, disable the autopilot sensitivity, and fine-tune the manual signal sensitivity to the one that is actually recommended by the dashboard. Opting for a higher time frame can also contribute to this strategy, reducing the number of trades you make but increasing their quality. This method tends to be less stressful and more suited for those who prefer a more measured approach to trading. Remember, in trading, sometimes less is more. Quality over quantity can significantly improve your trading experience, making it not only more profitable but also more enjoyable. Let's talk about the confirmation signals. You'll notice two types: the basic ones, marked without a plus sign, and the strong signals, indicated by up and down arrows with a plus sign. Strong signals align with the current trend, suggesting a higher probability of continued movement in that direction. In contrast, normal signals might pop up during a retracement, where the price temporarily moves against the trend. If you're just starting in trading, I recommend focusing on these strong signals. They're like a green light saying the trend is on your side. But remember, successful trading isn't about acting on a single signal. Instead, look for multiple signals that point to the same conclusion. This layered confirmation is what traders call confluence, and helps ensure you're making decisions based on solid, repeated evidence, not just a one-off hint. Moving on, let me show you another example for a buy trade using the Euro-USD chart on a 5 minutes time frame. For a buy trade to be considered, we must see that 4 specific criteria are met. Firstly, determining an uptrend is crucial. This can be done in 2 easy steps. The initial step involves examining the candle coloring by the signals and overlays indicator. The second step involves observing the trend tracer. For an uptrend, our goal is to see candles in green and the trend tracer colored blue. Here, with a green candle and a blue trend tracer, the uptrend is confirmed. Proceeding to the second rule, a legitimate pullback must occur into the trend tracer. This means the candlestick should either touch or close below the trend tracer line. For the third rule, turn your attention to the oscillator matrix. A valid buy signal is given when the hyperwave dips below the 20 mark during this pullback. It's important to remember that a valid pullback is indicated by candlesticks touching or dipping below the trend tracer line. And lastly, the signals and overlays indicator must issue a buy signal. Finally, as all conditions are met at this candlestick, you want to open a buy at the candlestick's close, setting a stop loss just below the last swing low. And now, let the trade run. Planning to exit once you spot a blue exit signal. Share your thoughts on this strategy and drop a comment below. Your feedback means the world to me. Now, before I'm going to show you a sell trade example, let me quickly explain how to identify a swing high or a swing low. In the case of a swing high, you simply want to use the most recent candlestick with the highest wick, which has 3 lower wicks on the left and 3 lower wicks on the right. And the opposite is true for a swing low. To identify a swing low, you simply want to use the most recent candlestick with the lowest wick, which has 3 higher wicks on the left and 3 higher wicks on the right. Okay, now let's take a look at a sell trade example using the New Zealand USD chart on a 24 minutes time frame. Remember, for a trade entry to be valid, there must be 4 conditions met. For the first condition, you want to see a downtrend, which involves seeing a red-colored candle combined with an orange trend tracer line. For the second condition, you need to see a pullback into the trend tracer line, which means you want to see the candlesticks either touching or closing above the orange line. Then for the third condition, you're going to check the oscillator matrix. You want the hyperwave to cross above the 80 level while the pullback happens. And finally, for your last condition, you need to see a sell signal confirming your entry. And now, as all conditions are met, you're going to enter a sell trade. Use the recent swing high for your stop loss and close your trade as soon as an orange exit signal appears. To wrap up today's video, you've learned a trading strategy that's both simple and effective. Whether you're new to trading or looking for new tactics, this strategy offers a solid foundation. If you want to learn my best strategies for trading Forex, cryptocurrencies, and stocks, check out one of these videos.